Hey gang, over the past few weeks, there's been two major factors driving the economy. One, interest rates, and two, global tension, global markets, and global economy. Right now, there's something else on the horizon you need to know about, and I need to show you what that is. So let's jump into my lab and I'll go through the process as we speak. As I mentioned at the start of this video, right now there's two major catalysts that are driving the market, two major factors that investors are looking at. The first thing is earnings. So far, we've had 84 S&P 500 members come out. That's 16.8% of the index's total membership. And that accounts for 22.3% of market cap. Total earnings for these 84 companies are up 19.2%. That's almost 20% from the same period a year ago. And the revenue's 8.4% higher. 82% are beating estimates. And 61% is beating revenues. That's a big number. That's better than expected, and that's going to give stocks that are sinking a pause. And that's going to cause funds that are causing the selling pressure to pause the selling, in my opinion. Now, there's one more factor that we're looking at, and that's the small caps. Let me show you something very interesting. What we're looking at right now is the chart of the Russell 2000. The Russell 2000 tracks the small caps. This is equivalent to the S&P 500 for large caps, but this is for small caps. As you could see here, we are right now sitting near medium-term support levels. But take a look at something interesting. If you look at the levels below, the RSI indicator, which measures overbought and oversold level, was neutral. It was completely neutral. Now we're having divergence. Price levels are at the same level as you could see here, or near the same level, about the 152 level. But right now we're showing deeply oversold levels. As a matter of fact, the RSI went all the way to 12.31, which is the lowest level I've seen in years. And that's telling me that small caps are becoming grossly oversold. We have earnings that are better than expected, substantially better than expected, on a larger percentage of market cap. And in addition to that, we have the Russell 2000 showing oversold support levels and divergence from the RSI from last period. What does that tell me? Why is this important? This is telling me that markets should be moving higher. Sentiment is changing. Markets are brushing off global tension. They're higher as of this Monday, and the RSI is oversold on a medium-term basis, and it's diverging. Those are very important, and when you take that into account with the fact that earnings are better than expected, substantially better than expected, that's telling me that fund managers are going to take notice and markets should be going higher. The point of resistance we want to look at on the Russell is the 159 level. If we can get above the 159 level over the next 5 to 10 days, we're going to see a lot of buying pressure moving into this market. I hope you got some value out of this, and I'll talk to you soon. Hey gang, I created a 90-minute class that talks about the two factors driving the market right now, small caps and earnings. I want you to watch it. It's very important. Please follow the link below this video. And if you enjoyed this video, if you enjoy my commentary, if you enjoy my analysis, I want to hear from you. You guys make these videos better. Send me an email, roger@wealthpress.com. Talk soon.